All right, guys, what is going on? Welcome to the live stream. Hope you guys are having a good week. Hopefully you had a good Friday today as well. If I can find the camera. All right, there we go. Yeah, epic music today. Oh, yeah. You are solving the impossible. Interstellar soundtrack by Cinematic Focus. So, you're welcome. Free music recommendations. So, let me see. I really don't have too many announcements for you today. One of the more important things I would say, I did say on my story yesterday already, I'm almost a third of the way done with Wisdom Takes Work by Ryan Holiday. Right? Again, I shared this a lot. Not a lot, but I shared this like 2 or 3 times yesterday. My Instagram story, I showed you all 5 of the copies that I got. Showed you the manuscript page. And yeah. So I've been reading it. I've been liking it. I haven't come across any political shenanigans yet. Hopefully there isn't any, but so far so good. And I may not finish it today, but I'm probably gonna finish it this weekend. That way, you know, we can go ahead and complete the series, complete the Stoic Virtue series, be done with it, and then probably just revisit this series. I don't know. Maybe we'll give it like a year break and then revisit in 2027. So, let me see. Not a lot of people here today on FAFO Friday, right? But what's good? 2020, Eric, Naruto, Willow, Felix, Capitalist, Broadway. Chat is open today. I know it's been some time, but I opened it up today. What's good? Eric and Lee Bright. So, before I get into it, let me tell you something. This music, by the way, they did not mix and master it correctly because some of it's really, really quiet and other parts are really, really loud, and that makes it really annoying. Unless they did that on purpose, but it's annoying. What's good, EP? What's going on? Are you feeling blessed, chat? You see my hat, right? Are you feeling blessed? I would hope so. I would hope so. Kobe, what's good? So, first thing we'll start off with. We won't do an I told you so. I know some people out there don't like that. They don't like it. In yesterday's market review, right? I talked about our range of that FAFO Friday and said we've been inside this range for the last couple weeks, but we're not going to be range bound forever. Right? Markets don't move in a straight line. And when they do consolidate, they don't consolidate forever. They can consolidate for a long time, but not forever. Then I gave you a little bit more information on the daily, but just to get through this, because I want to hurry and get through this. When we drop down to the 1 hour, right, we obviously have had these highs in mind for a while, for the last couple weeks, right? We've had that. And I think, unless I was talking about ES, I don't remember. I was so tired when I made that market review yesterday. That's why it was kind of short. I don't know what happened yesterday, but I was dead. I was like a zombie. I was like sleepwalking that market review. I might make you another one just to make up for it, but it might have been ES. I had talked about some highs as well for an upside target. I think it was ES now that I think about it. But anyway, all of these highs, right? So now, right? And we also actually went over to regular trading hours, and I showed you these as well, I believe. See that right there? That's beautiful, especially on triple Qs as well. You know, funny enough, Naruto, I actually ate the Mac after that. That just made it worse, though. So I was like dead after that. It was cool. So anyway, you want to know what's really interesting? Well, of course you do. That's why you're here. But do you remember? All right, scratch that. What do you know about 50% of ranges? What can you tell me? What can you tell me about 50% of ranges? Law number one, buy low, sell high. What constitutes low? What constitutes high? And what, give me some character, there's more than one answer. Give me some characteristics here about the 50% of a range. Ideally, like a higher time frame range. Like on a 1 minute, it ain't going to be the same, but on like a large time frame, daily, even like a 1 hour, 1 hour is good. What can you tell me about the 50%? Right? So watch this. If we take this range here, we got FAFO Friday's low, and we got all-time highs on Wednesday the 8th, right? So if we take that high down to our range low, and we have our 50%, what can you tell me about that? What can you expect for this? What can you expect to happen near that level? 24,775 or 776, whatever, close enough. Okay, we're not trying to go for perfection on the actual price level here, but close enough. Okay. What's good, H? What's good, Jackson? Consolidate around that. Consolidate, can anticipate highs and lows. Ran, then go back into the range around 50%. Consolidation in fair value area. Okay. He said 5. What is the 5 for? Am I not awake yet? What's good, Roger? Okay. 50%. You ready for this? 50% price tends to consolidate near 50%. 50% of a range can also be discount if you're bullish, or a discount if you're bearish. Even though technically it's a fair value because it's halfway, it's 50%. But if you have a bias, the 50% level can be bullish. Now drop some ones if you've heard me talk about that before. If you've never heard that, don't say anything. Music, like reset again. I'm about to just go and click on a different music. Okay, wonderful chat. So you guys have heard that. 50%, we can consolidate around that. If we do consolidate, the qualities of that consolidation are going to be run lows back into the range, or sweep lows rather, sweep highs back into the range. Beautiful. When the market is bullish, fair value will be a discount. Okay? Now, you typed, excuse me, You guys put some ones in the chat, which means you've heard that before. Right? So then what do you think is going to happen here? What do you think is going to happen here? There's our 50%. We don't actually trade into it on Wednesday. We'll take a measurement on ES as well. But yet, that 50% level, just like we saw, highs swept, back in the range. Lows swept, back in the range. Highs swept, back in the range. Lows swept, back into the range. High. I wouldn't really call this a sweep, but we do get close to those highs, and then we trade back into the range. We get near 50% here. And then we extend for those highs. Okay. So do you see why yesterday, I don't know what time it was when I said this, but on Thursday in the Discord, do you see why I said I'm leaning bullish, even though we have lows down here? I thought we might, on Wednesday's live stream, I thought if we were bearish enough, we might extend for that. But again, we just leave those open. So, okay, if we're not going to take those, that's fine. And then on Thursday, I'm leaning bullish, right? And now you can see why. Okay, those highs up here, and definitely those highs over there. So Thursday, beautiful. We get that extension. We don't go for the highs yet. And then overnight, I think it was London, we snagged the first lower set. And then obviously the news drove us higher today. That news at 7:30 here, right? Initially a little bit lower and then slams for that liquidity. Did y'all see that? What the fuck? What's going on? What is going on with the internet? It's either internet or trading view. Are you guys still here? Drop some twos in the chat. Omar, I have no idea about gold. But can we do a sound check real quick? And a video, audio. Man, I'm asleep. Audio and visual check. Broadway said 3. Yeah, you're blocked. Good luck to you. Okay. Thank you, guys. All right, let's go over to ES for a minute as well. So again, all I'm doing is taking the range. All-time highs. FAFO Friday's low. You see that? And here we are. Okay. So again, that 50% level, same thing. When we stayed range bound, sweep lows, back in the range, sweep highs, back in the range, so on and so forth. And then, like I said yesterday, we had a small time frame divergence in there. And funny enough, right, this right here is a pretty good testament to having the regular trading hours gaps, right? Because even though they might be disrespected, they could still be reclaimed later on. That divergence there. And then obviously those retracements yesterday sent us higher. We are higher here as well. So maybe I got something wrong. The other day I was willing to bet that 50%, something came down to 50%. Now I don't remember what it was now. Well, oh well. So anyways, markets are at all-time highs. So like if we go, it was the triple Qs. That's what it was, chat. That's what, see, I got to write stuff down. Look at this. Friday the 10th down to Friday the same 10th low for the triple Qs. That right there. There we go. So the futures did not get to, actually, we'll put this over here. The futures side did not get to 50%, but the triple Qs did right there. See that? So when we had buy side here, and I did tell you that, I did say earlier this week, look at the triple Qs. If you didn't, you're lazy. But you see how that works? So we did consolidate, same thing. Lows, sweat back in the range, high, sweat back in the range, high, sort of sweat back into the range. But then look here. We have liquidity. Markets long-term are bullish most of the time, right? So then what happens here? That 50% becomes fair value. So it becomes a discount because the market is bullish. And that was on Wednesday. So then going into Thursday, we can be bullish. Going into Friday, we can be bullish. Now, we had news pre-market, so we did gap higher, right? But you see how that works, though? Drop some threes if you see how that works. You can have a bias by simply understanding a little bit of history here. I just got done reading a chapter on like history. So, this stuff is not new. It's not new. This stuff repeats all the time. And guess what? We will also see this time and time again. We'll get a big range. We'll stay within that. The markets will sweep lows and go for the highs, sweep highs, go for the lows. And then eventually that 50%, if it's bullish, it's going to go higher. Or if it's bearish, that 50% is going to be utilized to go lower. Okay. So knowing this is important. So you're not offside. Like if you're trying to short on Thursday or trying to short today. Okay. Friend of mine, he was trying to short NQ. I said, you don't want to do that. I said, NQ, or I said, you don't want to short NQ. I didn't put it that way, but I'm paraphrasing. I said, ES has not ran or swept its data high yet. Like in here somewhere. Because he was trying to short. He was shorting NQ somewhere. And I said, you don't want to do that. Because ES still has its data high to go for. We did go a little bit lower here. Back into our opening range gap. And then, right, we ran for that. So, somebody posted they were trying to short NQ earlier in the Discord. And I immediately said the same thing. I was like, wait. ES still has its data high. So you got to be careful. You got to be careful. And it is RAM. I already talked about that. My friend. Boom. See that? And I got the signed manuscript page too, page 80. So that's pretty fitting for somebody who likes, zeros, 20s, 50s, and 80 levels. That's pretty neat. So why can't data high be left open? I don't know what DVG is. Are you trying to say divergence there, Felix? It can. And I said that in the chat too. I said it can be left open. They could leave the data high open, but I didn't think so. I didn't think they would. Why would they? You see, this is the problem, chat. This is the problem. I would say, I gotta find new music, bro. I'm sorry. Give me a second. I'm not gonna keep dealing with this volume, bro. I can't have silence for some reason. My brain won't allow it. What were we talking about? Someone in the Discord was trying to short NQ. Buddy of mine was trying to, but he's a really, really good trader though. But it's just like that. I was like, yo, I wouldn't do that. I would say for most traders, I would avoid trying to pick a top in the market. I would avoid trying to short at all-time highs. Okay? I've done it. You've seen me do it. But I did not do that today. Okay? I would, for most traders, I would avoid that. I would absolutely avoid trying to short at all-time highs. Okay? Don't be a salmon. I know we talk about salmon sometimes. It's been a minute. But that's what salmon do. They swim upstream. And what happens? They get clapped. So imagine trying to short today. I mean, I guess there was some opportunity to a degree. The market did make like some lower lows, but why swim upstream? You know what I mean? Like, why would you do that? Anyone trying to short, they've already built equal highs in here. Now I could see shorting above that, but if we're at all-time highs, then where does the stop go? Is it for ES? Is it 5 points? Is it 10 points? I mean, like, you know, what is a high probability, respectable amount of risk? And I don't know. So I would just avoid trying to short today at all-time highs. You tried to short NQ there. I mean, look, I get it. Okay, I'm not trying to dog anybody. I've taken losses too. I've tried to short at all-time highs myself. Like, I'm not perfect, bro. But when I see something and then I see others like falling into that trap, that's why I try to say something to save you from that. Now, mind you, as a mentor, I should realistically, I should just leave it alone and not tell you anything and just let you make that mistake on your own. But, you know, I don't know. There's something in me that wants to be like, don't do that because you're about to get wrecked. So, and yeah, that's what I'm saying. After you posted that, I said watch data highs on ES. So if we are what? Bullish on ES, look at the numbers here, and NQ is stronger. You're shorting the strongest index. You get me? So if ES is going to catch, and again, I could have been wrong. I could have been wrong. We could have left that open and just wrecked lower. But Dow made it, NQ made it. It just wouldn't have made sense to me why ES wouldn't follow up or wouldn't follow suit. It just doesn't. That doesn't make sense. So to me, it's like there was no choice but to run the data high. But that's what I'm saying. Okay, if I see somebody that's getting ready to make a mistake, now if I don't have a bias, like if I don't know, you're on your own. I don't know. You know what I mean? But if it's something obvious, like, okay, bro, you're trying to short the strongest index. You're trying to short the strongest index at all-time highs. You're about to get wrecked, bro. Like, you're about to get greedy wrecked. So that's why I try to save people from that. Flacco tried to short as well. Yeah. It's an interesting phenomenon. You know what I mean? Like, I don't think I said anything today in the Discord. Like, I'm bullish, I'm bearish. I didn't say anything. I think it's 7:30 this morning, or like 7:40, maybe a little bit after. I said, hey, there's your buy side for ES and NQ, right? Like, we got the buy side, you know? But I do think it's interesting that a lot of people do want to short today. That's interesting to me. Because I don't see it. Yes, we have consolidation. Yes, we have data low for ES. Yes, those are like triple lows and they look clean. They do. You know? But as you guys know, lows can be left open. So that is looking like the case today. I would also take note of like the time constraint too. I used to talk about that a lot when we were first streaming here on YouTube. I was saying, well, there's really not enough time in the day to come all the way back down here. I don't think that's going to happen either. In a perfect world, and this is, I highly doubt this is going to happen, but in a perfect world, I would want the market to run up, sweep those highs, and then trade lower for like this morning's lows, and then maybe like the triple lows down there. But think about it. The market would have to drop pretty extensively. Like 40. Actually, let me do that again. If it had to run these highs or sweep those highs and then go for those lows, I mean, we'd have to have like a 55-point range. We would have to have a range larger than the pre-market news in the PM session at all-time highs. Like, do you see what I'm saying? That's just not probable to me. So we'd have to also get through a lot of that gap, the opening range gap, which again is regular trading hours. Thursday's close up to today's open. That's what we've done. And now we're here. So the long-term portfolios are looking good. You guys have long-term portfolios? Either like a 401k, self-directed IRA, self-directed trading account, Robinhood, Charles Schwab, E-Trade, like a stocks account, basically, like long-term stuff. If you've, let's actually go to SPY. If you have, right, any sort of long-term accounts, look at that. Look where we are, man. Look at that. Long-term accounts are killing it today. Killing it today. Wow, hello. That always freaks me out, that damn pop-up. My Pokemon binder been bussing lately. I don't know anything about that. I don't know anything about cards and Pokemon and Yu-Gi-Oh! And all that stuff. I never did that stuff as a kid. I always thought those kids were losers, personally. I love video games, but I was like, cards, bro, you're like, gay. You know what I mean? But like, bro, when you're 8 years old, like, you don't know anything. He said expensive cardboard. Yeah, so I was like, nah, I'm good on that. I'm good on that. You're surprised? Nah, don't be surprised. Triple Q, same thing. It's been like such a phenomenal year for the long-term accounts. Like, look at this, bro. All you had to do, chat, all you had to do, and I know I explained this a couple weeks ago, this year's been one of the greatest years in terms of buying below the yearly open. I don't know if Lee Bright's still here. Remember a couple weeks ago, he said he had started a program. He was purchasing stock like every Monday or whatever. So all of those positions are up, all of them. Now, of course, it like averages out and DCAs, if you will. But whatever dip you've bought this year, no matter what dip, when the markets hit all-time highs, you're up on everything. You know what I mean? Like, you're up on everything. You can't really do this with prop trading, bro. You can't. You can't do that in futures either, because they expire every 3 months. Yeah. But stock, you can hold for a long time. You can hold pretty much indefinitely, actually. You know? So yeah, this was a wonderful year for buying below the yearly open and being bullish. You know, I used to teach that a lot back when I was back when we were still part of IM Academy. You know, I used to tell people, why would you short stock? Why would you short indices? You're getting literally wrecked. US 30 shorts clapped. It's like, bro, all you had to do is buy US 30 and hold for 6 months, and you would outdo everybody. Like, literally, even if you took drawdown in 6 months, bro, you would have like smashed it. And I kept trying to say that. But nobody ever listens to me. I'm just some dumbass, you know? I don't know anything, and, you know, nothing makes sense. So, but our low of the day, some low resistant lows. When we gap up to all-time highs like that, we'll probably revisit this at some point. Probably won't be today, but I would keep those on the chart for now, in the same way that we keep highs on the chart, even, you know, for a few days or possibly a few weeks. Okay. But outside of that, I really don't have a lot. That's my point, Jordan. A lot of people tried to short today. For what? For what? Why would you short at all-time highs? You know what I mean? It just, I don't know, man. It's like we just love losing money. You know? It's like we just love trying to pick a bottom or a top. I get it. I do. But there are times when it's a lot easier to pick a low or to pick a high. All-time highs is not it. Not it. So observe the masses and do the opposite, man. When you find yourself among those on the internet and you're all in agreement, you're about to get a new one. You know what I mean? Like you're done. So if everybody's bullish, be bearish. If everybody's bearish, guess what? Be bullish. When is an inversion considered valid and when is it not valid? I would say time, number one, time. But price-wise, I would say if it's being respected or not. Like, if you see this suspension as an example, that suspension here, okay, we traded into it, off of it, we don't make it, we end up creating equal highs instead. So then we get manipulation, and this ends up being reclaimed. Okay, so I don't really look at the reclaimed stuff all that often, but based on what I've seen, it usually looks like respect, manipulation, reclaim. If that makes sense. That's usually, and again, this is just like, nobody taught me that. It's just from my own studies. When you look at the chart, like that's a pattern that I see because it keeps coming up again and again and again. Now, for an inversion, to me, I like inversions that are one and done. And I'll give you an example. And I'm really trying to zoom in here because I can't tell if that actually hit or not. Okay, so on this 5-minute time frame, you see this right here? You see how we made a low, a high, and then a lower low? And look at that wick right there, right? It just wicks. That low comes off of it, closes, and then like NCE for the run higher. We have on this chart a 5-minute imbalance here, okay? And we trade immediately through it. So if it's on the way to liquidity, I would anticipate that to be an inversion. Okay. Now again, this is hindsight. I did not look at this at 11:45 trying to long that. I didn't do that. But I'm just trying to give you an example, Roger. As per usual, we want to see the bottom half left open. Every concept has a premium and discount. If we're bullish, we don't want to see the bottom half traded into. Or if it does, maybe just a little bit, that's fine. to go higher. But I would say if we close below like the halfway point or just close below this altogether, then yeah, I would say it's probably invalid. Does that make sense? But again, time is an important factor. Okay? Time is a very, very important factor. And that's actually a good transition over into something I wanted to show you as well. I looked at this yesterday. I didn't think I had the macro indicator anymore, but I do. It's there. So I thought that was interesting. I don't know why I didn't see that. So ooh, that's too much. Do like a 20. Okay, so for a visual, because we're gonna get messy in the charts now. I was gonna post this the other day. I think it was Tuesday or Wednesday, but it might have been Wednesday. Do you guys remember how we looked at the macros and I told you like every macro was a turning point to go lower? And then at the end of the stream, we were in another macro, obviously the 1 o'clock macro. And I said, well, this looks like a turtle soup, and we've already sold off a lot, so this may not be a continuation. And that was like the low, and now we're at all-time highs, which is insane. But my point is, when you look at these macro, and it may not be every single one. And I want to say we were watching NQ, right? But even like for ES, look at this. High in a macro, right? Turning point in a macro, turning point in the macro, turning point in the macro. Now, when we had that low, and then we had the lower low below that, when we were on the stream, I was saying, yeah, be careful. This might be a soup. It might be. I don't know. It might be. So that was our low. Okay. These should all really just be red. Just to, again, just to sort of give you a visual here. Okay. Macro lower, macro lower, macro lower, macro lower. Soup macro higher. Macro higher. And then this was our like MOC/3 p.m. So I wouldn't really put too much emphasis on that, but it does make a low to then go higher. So it looks almost like an indicator here, but I look at this, and this to me is just fascinating. I got you, Roger. The is it the inversion model video? That's just the last imbalance on the way to like the last imbalance in a liquidity sweep, if you will. So, ooh, this is kind of trash. We have multiple imbalances, but we have a suspension as well. Like right there. See that? Right there. Now, I wouldn't have longed that personally, but what I taught you was the last imbalance in a liquidity sweep. So like if this was a soup, right? Because we have the low, a lower low, and then that lower low below the old one. That's a soup. That's a really good candidate for the inversion model as well. It's just we don't have like a pronounced nice imbalance here. We just have the suspension as the last concept to go lower. And it's just interesting that suspension does get met. Body's respecting it, and then the reversal. But in any other case, let me see if I can find one for you. This looks pretty awful. This looks pretty awful. This one's not great, but this is more or less what I like to see. So like this low here was taken, right? And we do have an imbalance right there, right? That was the last one on the way lower because we start trading higher here. We include that gap though, as per usual. That to me is a good candidate for an inversion. So it trades through that. The next candle, that could be an entry. Obviously, you would have taken drawdown. It trades through it again. And then that return right there at 938, that could be a candidate for an entry long. That also overlaps with that down candle. So like that. Oops. Like that to me is a good candidate for a long. You get me? It's just the last imbalance prior to a sweep that gets traded through. Like that's the one I want to utilize to go the other direction. That's one of the earliest, shift or change in the state of delivery. So no breakup structure required. Now in this case, obviously it was short-lived. It does trade higher and then, price trades lower for that low. And then it does something very similar. It's just, if we don't have like an obvious pronounced imbalance, we just get a lot of back and forth, then I just have to go to a different time frame or don't use that model. You can't use a model that's not there. You know what I mean? So, you guys want to short this or what? You guys think this is a good short? Do we think it is a good short, chat? If we're at all-time highs, we have equal highs, and a macro is coming up in like a minute and a half, would this be a good short? He said with the farm. Well, I hope you have insurance. You know what I'm saying? I hope you have insurance on that farm. So, but and it's the same for the other direction too. Now this is not a good one. It's not a good one at all. But if this were the case, it would be the last imbalance on the way up that gets traded through, and then when we get back into it, that would be the reversal. But with equal highs at all-time highs, that's not a good candidate for short. This is a good candidate when it goes lower to get people to build their stops here. So the imbalance on the way there, we traded lower inside this imbalance and then back inside that suspension, and that was right. Oh, look at that. That one was outside the macro time, but that right there was inside. See that? And we're at 1250 here, by the way. So our 1 o'clock macro is here. But yeah, that's interesting. See that? Just go to NQ for a second. Ooh, NQ already did it. You dirty dog. You dirty dog. Look at that. It already did that. It said I ain't waiting for no macro. I got money to take, baby. I got liquidity to capture. I ain't waiting. But yeah. It's just interesting, right? Again, not every macro, because like our 12 o'clock macro didn't do anything. But you look at the other macros of the day. This one like short-term low. This one short-term high, right? The 10 o'clock macro took us lower for these lows. left open the larger lows, and then reversed higher. And then this macro didn't really do a lot either. Kind of a crappy turning point to go higher. But all I'm saying, chat, is if you're going to look at day trades and stuff, dude, if you're going to look at day trades, just look at when these highs and lows occur. Look when, right, and where these concepts occur. Oh, matter of fact, this is a much better example on NQ. Why did we not go over this first? You're fired, chat, all of you. Watch this. Or maybe I mentioned this in the market view. I can't remember. But these lows here, right? Swept. But look at that, okay? Really focus in on this. I probably should have included that gap right there, but it's fine. But do you see what I mean, though? When the market trades below an old low, and it does that with such an obvious imbalance. You see what I'm saying? That's such an obvious imbalance lower. It gets traded through at 1048, and then watch this, okay? Because people still think there's no algorithm, that this is all just supply and demand, okay? That everybody came in and everybody just agreed right there at 1050, traded down perfectly right into that inversion, even like a smaller overlap of like an imbalance on the way up. So this becomes a balanced price range. Boom! Higher. Look at that. Look at that. And then guess what? That was like not the low of the day, but that was very close to it. To one of them at least. Had multiple low of the day. Like the actual low of the day and then a little bit later. But that was a turning point in the marketplace. Manipulation, inversion inside of a macro. Boom. Time, price, context, baby. Time, price, context. Look at that. I think the caffeine is finally starting to kick in. But do you see what I'm saying? It's time based, bro. Time and liquidity based. All right. Now, if it's outside of that, there's still going to be opportunities, but the best ones are going to align with time, price, and context. That's all I'm trying to say. So, again, macro times, they work. They're nasty. They may not work every single time. Again, it may not be every single macro. And I don't fully understand that. Okay. Sometimes the 12 o'clock macro does amazing, beautiful things, and sometimes doesn't do anything. Okay. So there probably is some sort of day of the week phenomenon that goes into that I probably haven't studied enough, but hopefully by now you have looked at this enough to understand, like, yeah, macros are pretty important. What's a good way of finding first presentation with live price? I find hindsight is always easier to identify. It's the first concept, usually going to be the imbalance after 831. But I would also keep in mind, if it's like a really, really, here's a perfect example. We have 832 and we have a small imbalance with this gap, but then we have this imbalance here with this gap. This one is I don't know what word to use here, chat, without trying to like sound my mind is corrupted, chat. If we have the larger one, okay, the one that's more obvious and pronounced, that to me is the first presentation, not this one in here. Like this little small one right here, like that one you probably don't want. This is probably the one that you want. So now, is that going to be important? Like, let's say at every single during like throughout the day, right? Like if you extended that all the way over throughout the day, which we did earlier this week. Remember, we kept looking at Mondays and it was still being respected on Tuesday and Wednesday and Thursday. That's something to pay attention to, okay? But it can be respected, and then we see manipulation, and then it becomes an inversion here. It becomes reclaimed here. You see that? So I know some people out there are going to disagree. Again, that's fine. Like literally you are allowed to disagree. It's fine. But look at that right there. Okay, look at this right here. Now, I didn't look at this earlier. This is, you and I are looking at this at the same time. Have a good one, Roger. But look, watch this. That on ES, this first presentation, right? Respected inside the macro. It does like sweep the low, go for that high, right? Inside of that. Cool. Outside of the macro time, we trade below the first presentation, right? Then we trade above it. Okay, no problem. Now watch this here. Our macro takes us below it again. But what did I show you earlier? It's usually respect and then some sort of manipulation and then reclaimed. So this at 956 was manipulation, and then we trade above the first presentation, and then it's respected here. You see what I'm saying? When it trades back into it right there on that candle. I need to make it like an obscure color so it's different. You see what I'm talking about? Trades above first presentation and then back into it right there at 10:04. So respect, manipulation, reclaim. And then it'll be the same thing here. This suspension, it was respected prior and respected during that macro, disrespected, manipulation, and then reclaimed. A little bit of drawdown on that, but it goes higher. So just like I've already talked about multiple times, a concept can be disrespected, but if it's respected inside the time window, then it's good to go. Again, these are just observations that you just look at price and you can see. Time and price, of course. And yeah, does the macro happen with all, I would say assets, because these are not pairs, but yes. It's bananas how it reacts from a super small. Yeah. Because why do you think, Lewis? Why do you think? You're welcome. You're welcome, Jackson. So, well, we didn't run the equal highs yet. We may not. We may leave that open. I don't know. But all I know is I would not short this market today, personally. All concepts can be inverted. Can you explain why we hit equal, I don't even know what you're saying right now, of the CPI candle and not go for the data lows? One shorted. Wow, that's crazy. Shaney, can you rephrase that? Because I'm really not sure what you're asking here. Why we hit, unless you're saying equilibrium of the CPI candle and not go for the data lows? Yeah, I have no idea what you're asking right now. Yeah, that still does not, I still don't understand your question. Excuse me. So let me see. Are you referring to the range of this candle? Like, are you measuring that? Yeah, you're lucky I'm halfway smart. That's what I'm saying. Well, first of all, I don't think I've ever done that personally, but I don't know. I guess price respects that. and it's going to leave those lows open. We discuss this all the time. Lows can be left open. They can be left open for minutes, hours, days, weeks, sometimes indefinitely. Like, that's what I said earlier. I don't see us getting down there today. Now, I do think that is going to be important at a later date, because you know what? I'm going to just, at this point, I'm going to take everything off, because this is making my eyes bleed. It's making my eyes bleed, chat. Because we have this huge gap here. So this big gap with those lows at wherever they were, whatever price level that, I don't even know what that was. 6792.5. Right, 6792.5. It's like right in here. So I don't see that staying open forever. Okay, I'll tell you this and then we'll hop off here. You shorted, that's why I'm asking. Yeah, why is everybody shorting today, dude? I don't get it. I don't get it, chat. I'm telling you, man, I gotta be the worst mentor on YouTube. I have to be. There's no way I'm not. I have to be the worst mentor on planet Earth, because people don't listen and people do the opposite and get wrecked, and then ask me why they got wrecked. Well, it's like, well, I don't know. 7:30 for NQ. Okay, and I don't trade prior to news. I usually don't. Now that's an engineered high. I looked at that prior to news, but I wasn't going to trade the news. I saw that on my phone. I wasn't even on the computer. I was like fresh out of bed. I'm like, what are we doing? I'm like, oh, that's an engineered high. Let me roll back to sleep. That low was taken for NQ, okay, to go higher. With YM, we don't do anything. We like tick a couple ticks or a couple points lower and then higher. And ES, although it does go lower, it leaves those lows there intact. So they all did something different. They all did something different, and that's fine. Markets have to build liquidity to run it later. Okay? Now, a lot of that also has to do with market maker models, smart money hedging program. I'm not going to explain all that today, but that's how markets work. Okay? They're going to build liquidity to sweep it. They're going to generate liquidity. Okay? Make sense? So, yes, we have equal lows, even triple lows. But again, the markets are going to leave that there. Allow people to think that we're bullish, right? These retracements to go higher, retracements to go higher, retracements to go higher. So people who are long, right, allow them open profit. Smart money is going to give an inch, but take a mile. So they want to build liquidity, build stops here. So that way, whenever they do decide to short, they have someone to take the other side of that on the exit. So what did we learn today, chat? We learned, well, number one, not to short bullish markets, but number two really is avoid, for most people, avoid shorting at all-time highs. Okay? For gold, for silver, for indices especially. It's just not something most people should look to do. And Jackson, look, I don't know. Okay? I don't know. I do not know. I don't know everything. I wish I did. I wish I could just tell you everything right the first time and never be wrong or anything. MES does take the lows. Okay. What you have to understand is they are different contracts. They're not the same. Think of it like this. Think of ES and MQ like twins. Twins that are, what do you call it? Like identical. They look the same. Like you can't tell if that's little Johnny or Bob. You know, they look identical. But they're each their own person. One of them could go to jail. The other one could become a day trader. You know what I mean? They're going to have their different contracts. So while ES, let me move this over. While ES can create the lows there, okay, maybe someone had their stop. Maybe someone bought it prior to news, had their stop here, and the market, you know, went for that. Somebody else maybe put a buy limit below the low. I don't know. Okay. Oh, you're a twin? Oh, well, yeah, then you should definitely remember that. It's easy. They're different contracts. Now they're going to move very, very similar. They're going to be close, but they're not going to be identical. Just like Euro and British Pound. They're pretty close, but they are absolutely not the same. Euro GBP cross pair would be a testament to that. So that's the best answer I got for you. And it's not a goober question. I've gotten some goober questions. That's not a goober question. Because even myself, I've had that too. Like, for example, the micros took the data high earlier, like at 9:05. And we didn't do that for ES. It did that later. You know, why does that occur? I don't know. They're different contracts. Different trades, I guess. I mean, best I can do. Okay. And yeah, Lewis. I mean, like, I know I talk a lot, and I have fun with it. But you have to realize, if you're not writing this stuff down, even if it's like just a couple, like 2 or 3 sentences or 2 or 3 things that I've said, like, oh, markets consolidate near 50%. Side note, consolidations typically sweep lows and sweep highs, right? Like that's the stuff you write down right there. You know what I mean? Because when we get back into those conditions, that's what's going to happen. Or if I tell you, hey, 50% can be a discount if the market is set to go higher or lower. I told you that years ago. Look at this range on triple Qs. No, we didn't do that for the futures. We didn't do that on NQ or ES, but look at the triple Qs here. FAFO Friday, range bound, market left behind an engineered high, right? Beautiful, perfect high just prior to that one, or just shy of that one. That's an engineered high. And then the market blessed us with low resistant highs on top of that. Then we came right down for what? Boom, 50%. Right there. It overshoots that a little bit. Okay. So what? Bam. Look at that. Whoop. Done. So whenever you have these notes, that's like your mentor, bro. When I mean, I'm in the Discord, of course, but when you're looking at the charts and you're looking at the conditions and the time frames and stuff, you have your notes to reference that. So you know what to expect. Like the other day, oh, well, we had a lower low on one and a higher low on the other, and then retracements after that should be opportunities. And then what do you see? Retracements after that are opportunities. So that's how I like to think about it. But anyway, that'll be it. We actually went over the hour. I told myself it was going to be a short stream, and it ended up being a longer one, so that's always fun. But anyway, that's the end of our like 1 o'clock macro. We didn't really do a lot here, but either way it goes. Hopefully you guys learned something. Can't see how many likes we have. How many likes do we have on here? We have 53 people and only 18 likes. Yeah, a lot of y'all shorted today, huh? We're salty, so we're not gonna like the stream. I get it. We're all human, chat. I get it. Thank you, Lewis. I appreciate that. I appreciate that. I want to keep him short, Flacco. I really do. Like, if I could, I would have went down to like 30-minute streams, but there's just too much to talk about. There's too much good stuff to just reiterate, you know, and obviously the sidebar conversations with the questions and the books and stuff like that. It's a lot of information. I know you enjoy being here. If you guys didn't, then you wouldn't be here. So, all right, 27 likes. Yeah, that's acceptable. That's more acceptable. Y'all be good. Be blessed. Have a good weekend. Don't do anything stupid and go read a book, baby. Doesn't matter what it is. I'm going to read Wisdom Takes Work by Ryan Holiday, the fourth and final book of the Stoic Virtue series. See you guys on Monday.